All right, welcome back for the episode of Carnivore Trades. Today is Monday, January 29th, 2024. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Again, just 2 days left to take advantage of the active trader deal, 60% off for your first month. It might not be that good of a deal. I know we just took a loss today, so it broke our 18 win streak. Hey, it had to happen at some point, but it's been a lot of fun in there lately, and having a great start to the year so far. But in any case, let's get over into the markets here today. So spiders here up 75 basis points, Q's up just under 1%, Dow up 0.5%, and the IWM rounding it off up at 1.64, so 1 2/3. Nice move for the IWM. Talked about this earlier. IWM kind of seeing a little rotation, perhaps. Take a look at the intraday. Well, you can see it right here. Slight gap up, pull back, and then just kind of grinding higher. Whereas the Qs kind of gapped up and faded, and same thing kind of with the spiders there. Even the Dow a little on the soft side. So maybe a little rotation into the IWM. That's not a terrible thing to see overall for the market. Obviously, we had the big announcement today, quarterly refunding, and it came in, I think it was like 50 or so billion less, only 50 or billion so less than estimated, or at least previously, estimated by the Treasury. Take a look at this though. The Treasury has already issued 134 billion in debt in the past 4 weeks, and expects to issue 202 billion in all of quarter two. I don't know where they're getting that data from, but I don't think that's going to happen. So they make this stuff up. I don't know what Yellen and Biden are thinking here. It's an election year, obviously. So we'll see. We'll see how that goes. But in any case, all we care about is the market's price action here, and we're getting a bid. So markets spiders here again up 0.75%. We see the SPX here 49.26. I've been talking about 49.20 area as kind of the next level. We're through that now. And again, it's kind of difficult. I'm just kind of going off of gamma levels here. When you're at all-time highs, you kind of just have to use, you can use psychological numbers like quarters. Again, next level tomorrow will probably be 49.50. I would assume we could get there based off of momentum. But we are getting into, and I've said this last week too, we're getting stretched, and we're definitely getting a little euphoric here. Market's set to close in about 45 seconds here, and we are pushing up towards the highs of the day. Some gamma coming in at 49.30. We'll see if they get there. Again, it's not of much consequence. The market is rallying, and that's all we need to know. Until we get a high volume sell-off, this market can go higher. It's really that simple. And light volume here, so 50 million shares by the close. That's pretty light. Again, a lot of that is probably the market just kind of waiting on the QRA. By the way, do you think that might have gotten front ran again? So they were kind of bidding this thing up before that. We know the last time this was the QRA here, we had that flush on Friday, and then all of a sudden we just gap and go on Monday, the day before, or the day of the QRA, and that was the low, right? So we'll see how that shakes out. Spiders closing out, or markets closing at 49.27 here. Now, again, still the kind of big question is, maybe they're issuing a little bit less debt here, but the big question comes, do they start issuing at the long end? And if that happens, that still opens the door for liquidity to come out. But market's getting a bid right now just off that headline. And you're seeing bond yields kind of pull in a little bit. There's a ZN, got a bid off of that number, though it did come in, off the highs there. So again, it's not like the bulls are necessarily scot-free here. Granted, they're acting like it. The markets have been acting like that for a while. We also have some earnings coming up tomorrow. I believe AMD, Microsoft, and I think Google. I always get them mixed up. And Apple is later in the week with Amazon. And then, of course, we have the FOMC on Wednesday. So again, markets are kind of trading up into these volatility events, and bulls just not getting punished so far. They're being punished for absolutely nothing. We're overbought. We're getting more overbought. We had a nice coil here, and we are getting a push. That's totally normal. Kind of a 1-2 pullback, and another thrust. But bulls are getting away with everything, so they're getting everything they want here. Normal convention, normal wisdom would say they're pricing us up for failure into FOMC, and they're pricing us up for failure into big tech earnings. I feel like that has kind of been the case for every volatility event since October, November. And again, they keep getting away with it. So we'll see how much longer they can do that. There's also the case here where we could push up into 5,000, or maybe Fed doesn't matter, right? They don't say anything important and we just push up. Apple does whatever on earnings and we just push up anyway. And then kind of, after a couple of days, you get that euphoric blow off. That's when it kind of finally comes in. There's certainly that case to be made. My guess is if I was going to do it, I would stop at just shy of 5,000, maybe 48.90 or something like that, or 49.90, 49.80, somewhere in that area. A lot of pikers are going to be gambling on that 5 handle, and they're going to be waiting until 5,000 spot 0.10 to be selling. Again, these are just theories here of where we could go before correcting, or maybe we just never correct. Maybe we just keep going higher, right? Why do we need to correct ever? And again, until we get a high volume reversal, we can still go higher. So just keep that in mind. But I still think that we are starting to get in a little bit of euphoria mode here. Triple Qs did not make new highs. We talked about the Russell 2000. So again, here's a point for the bulls here. If you're bullish, you want to see rotation. There's the IWM. Good outside move today at 1 3/4 now, finishing strong into the close. Up move. We talked about this pattern last week. 1, 2, 3, 4, and then a pop. Looks like we got a little minor gap there at 199.50. We came close to it. Again, I'm just saying 200 as a whole round number, psychological level. So maybe a pierce of that gets us into that area. That's kind of all I see for the Russell right now. After it gets up here, it can consolidate more, maybe go to 205. But I think there's a lot of resistance up here with this red. So just be aware of that. But it's acting well, and that needs to be respected here. Dow here. Got through my 382.50 level. So again, next level, we'll just say 385 for the DIA. And again, the trend is up. It can go higher. Again, it's very overbought on the weekly. It's stretched on the weekly too. But again, until you get high volume selling, bulls can take this higher. They can continue gamma squeezing, 0DTing this thing up. So don't think that can't happen. And yeah. Don't think it can happen. I do want to say, though, VIX here did get a fake print to 1535 today. That's a fake print. And it actually held up and was green on the day. You could just say that's event vol. It's holding up here for the FOMC. It's certainly possible, but just be aware that could be a target if we do start to pop up on the VIX. All right, SMH here at 1.17. Again, was weaker, though, this morning, so definitely maybe a little rotation out. AMD does report tomorrow. That's going to be a big mover here. Semis are stretched, overbought, extended, every type of adjective or noun, whatever that you can think of here for the SMH. It did pull back here off the highs, and it got a bid. Again, weekly, a little bit of a tail candle there with volume that can indicate distribution. Do bulls distribute and then rotate to the Russell? It's certainly possible, but I'd be careful here owning the semis. They're very overbought, very stretched, and we're in euphoria territory. IGV had a good day today, so that had a power move right out of the gate, big up move, and then just powered all day long. So up 2% there for cloud software. So that's through the 430 handle. Remember, we had the little consolidation beneath it. And we're just getting through that right now. Next level is 440 and then double top. So that would be your red bar high from the 22nd, the week of the 22nd of November 2021. That would be kind of your next target there for IGV. This just has been a powerhouse for a long time. Nice coil there. Big move. Little kind of sloppy pullback, and then another thrust there for cloud software. Dow Transports today started out weak, but then got a bid by the end of the day, up 21 basis points. Again, this pattern here is fine. So up move sideways. Again, looks a lot like the Russell, although it didn't have the thrust the Russell did. But again, you had a lot of chop here. We broke down. There's buyers here that are trapped. They have to eat. You got to eat through that. And then if you can do that, this can go higher. So again, it's that simple. You still have resistance up here at 16.2, but if it coils enough and it gets ready, you have a minor pivot at 16.350 and 16.5, but 16.6 is ultimately where I think it wants to go. The uber bull target would be up here. So that would be your inverse head and shoulders pattern. And again, that weekly inside bar never failed. So we tested the low. I banged my fist on the table, said 15.2 is going to be support. And, we tested that and it's holding. So transports are okay right now. All right, let's get over to rates here. So again, I don't really see anything terrible for rates. I know everybody's going to make a big deal about it, but what kind of pattern is this, right? It's 2 year. It's a just bullish inside bar. There's nothing wrong with it. You could make a case it's a little premature and speculative, but you could make a case you got a little inverse head and shoulder there if that triggers. Again, it has not triggered. Don't make trades based off of this until it triggers. But you can make a case it's got that look. But either way, bullish inside bar, no problems here. Same thing with a 5 year up move, just pulling back. This can go a little lower and still be fine. There's a floor in yields. Just be aware of that. 10 year pulling back, still holding the 20 moving average. Again, this can go lower and still be fine. Same thing with the 30 year. It's still fine here, just chopping around after an up move. You're seeing the same thing with the dollar index. Up move, sideways, there's no problems here. So I don't really see anything that terrible for yields, even though market, the algos bought bonds immediately following. They're continuing to pull back here in the after hours. If you look at the Z, let's look at the ZB here, the long end. So already kind of pulling back off the highs there. Again, I had a little sell signal on TLT 4 hour, but again, that could easily roll over tomorrow. But anyways, I don't see any problems here for yields. XHB still in a range. That needs to do more consolidation on the weekly. VNQ up 56 cents. I don't really love the pattern. I don't hate it. The weekly, I'm kind of neutral on it. If it firms up, it could definitely be bullish, though. If you close below 83... 83.24 on a weekly, then it's bearish. Right now, XLF continuing to chug higher, up 10 cents on the day. That can still go to 39 right now. KRE never got bearish on this. So again, this can go to 55, 56. Been saying that for a while. KBE can go to 48 and a quarter. Saying that for a while too. Broker dealers, you're back above the moving averages. It can go higher. You got a little resistance right here, and then the double top. But again, I don't really see any problems outside of being weekly overbought still. Oil here. So this is what I got stopped out on today, in case anybody cares. Not on the swing basis, but on a day trade. Down $1. I don't really see any problems here. We went up into the 200. We went up into these pivots. It should pull back here. But as long as this just firms up, it can just firm up and stay sideways to up. This should get through 81. I'm gonna upgrade the target to 81.50 rather than 80. Again, I've just been saying 80 as kind of like a general number until we get closer. But I still think this wants to go up there and test that trend line. Again, 81.50 area. If it gets through that, it probably gets to 84.65. That's not going to happen in a straight line. It's going to need to consolidate and coil, right? You got to pivot, red bar breakdown. So it's going to take a little bit to you get 100 moving average. It's going to take a little bit to get through that. But as long as it holds this area, I don't see why I can't base and do that in due time. Another reason why I think that can happen is take a look at the XLE. Down just 12 cents today with oil down 1%. Look at the price action. Down, all the downside was in the first 15 minutes. Then closing right at the highs of the day. Higher lows intraday. That's bullish for oil. It means money is speculative money is coming into the sector, which obviously the stocks have leverage versus the price of just the commodity. XOP closed green today. All the downside in the first 10, 20 minutes, and then closed at the highs. OIH, same exact thing. Closed green today, up 17 cents. That's 3, 6, 7, 8 days in a row. It does need to pull back. But this is bullish price action, right? Dips are being bought, and that's why I don't really see anything that terrible for oil here, despite that, pretty sizable reversal today. I know they tried to take a dump on it with the Venezuela nonsense. Biden's going to do a lot. It's an election year, but that doesn't mean things are going to go down in a straight line. Everything gets, bounces and, it's the yin and the yang, essentially. Anyways, let's get over to CCJ. 20 MA holding up. Could be a little drop and pop setup. Trend is up. Pull back to the 20 moving average from an extended point. So could get a bid there. Same thing with URNM. I like that better. Up 1 1/4 here. Retrace targets would be like 56, and then your double top at 58. So again, uranium remains in a good position. I just think spot is, I know spot is parabolic. So just be aware of that. Nat gas is going to say it's down like 20%. It's actually down 5%. Again, this is what I was talking about last week with that big contract gap. It's really tough to make a lot out of this. I would just say, if we look at, there's another chart I've been following because you have these stupid backwardation gaps. I can't stand them. But you're kind of into double bottom, right? So let's just call it double bottom. This chart is adjusted here. It kind of factors out some of those contango / backwardation gaps. A lot of the time I've noticed that when you have these big moves, or not, it's not even a move really, it's a gap, a contract gap. A lot of the time you'll go in the direction of the gap for a day or two, and then it'll kind of work its way back up and try to fill. That's just kind of generally how I've noticed how it works. It doesn't always have to happen. I would expect this gap to fill. It's at basically and that gas is almost at a historic low as it is. So, I don't see how much lower it's really going to go here. But again, it's kind of, there's another, speaking of nonsense, the more gas stove nonsense today, Biden trying to shut down LNG export, just there's lots of political posturing going on. But again, I think it probably holds here. Maybe it pierces the lows here on the futures, but I do think we get up there and fill that gap probably sooner rather than later, honestly. Dollar index we talked about here. Maybe I'll just move the dollar index over to yield since it's right there, and they trade together. But dollar index still bullish inside bar. That's still going to 104.35. Nothing's changed about that. 20 moving averages go up to price. I think this is just kind of waiting for the FOMC here, and maybe that'll happen on Wednesday. Gold here, again, speaking of contract gaps, that did roll up. If you guys want, you can use the J contract. It gets rid of that gap. But right now, gold is still in a range. I don't see any problems with it. I expect this to hold up at least into the FOMC. I do think it does backing and filling because I am still bullish yields despite today's price action. But again, it's holding up with higher yields. I think a lot of that has to do with the war cycle. But yeah, gold's in a good technical position right now. I don't really see any issues. Silver also reclaiming the 20. So that's a good sign there. It needed to do that. You didn't want to roll over there. Next level, I'm just going to say 23.75 and then 24. If we get through that, it's back up to this trend line here. If this gets taken out, we're going to 21 to 21.25. Platinum here up 2%. Again, nice little inside bar there last week. Pop on Friday, pop today. Needs to get through 960, then you can get back up to 990 to 1,000. Palladium also decent price action today as well. Got to get back above 1,000. If you can get above that red bar right there on a close, on most assets, I would say that would be a squeeze. Palladium's a little different because it's so thin, but technically that's kind of what I would say at face value. So Palladium coming off a double bottom as well. And both of those metals look good. Copper also having a good day today. Nice inside bar pattern, 1-2 pullback and a pop. We'll see how that does. That looks like it's in a little bit better technical position. But again, just remember, this has been sideways like almost for a year. So I don't trust anything with copper just yet. All right, over to Bitcoin. Again, this is why you got to use those bigger time frames. I always harp on that, but it's do it for a reason. A lot of people were slam dunking and saying, "Oh, see, Bitcoin's going down. It's over." I told you, it's over. I said, well, if we close below here, then it's over, but we didn't. And right now, you just have a test candle on the weekly with a bullish inside bar with a 20 MA catching up to price. So you tell me, does that look bearish? Daily tested the 100 MA, tested this support, tested this breakout, and you're getting a bounce. You're back above all 4 major moving averages now. You are into resistance though. So this is your pivot, your breakdown bar. It's a moment of truth here. It's got to hold up. But right now, there's no real problems with it. And if this just consolidates, it can go higher. So there's nothing wrong with Bitcoin. You close below 39 on a weekly. 40,000. That bar, you close below that on a weekly, then it's going lower. But until that happens, I think it's fine. All right, again, so markets here. Again, we'll just give the market the upside bias. Again, tomorrow probably be a quiet day in the morning. We got to get through earnings in the afternoon, so I doubt anything's going to really happen. I would give the market bulls the bias here. They've got momentum right now, but I think we are getting into euphoria territory. So just take that for what it's worth. I definitely would not be opening fresh longs here. I also wouldn't really short either until you get a sell signal, and that is a high volume sell. Otherwise, they can take this higher, and there's nothing to say otherwise. So, anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.